In this video, I want to talk about the 19 reasons why you should consider selling Skillz stock, ticker symbol SKLZ. Now, I want to preface that point by saying I've not sold a single share of Skillz stock myself. It's actually still one of the biggest positions that I hold in my portfolio. I just think that it's important to understand the risks associated with every single stock that you may have. I've done a bull thesis for this company, now I'm going to do a bear thesis. I want you to keep in mind that every stock has flaws, and that I could do this list for every single company that I hold on my portfolio. The idea of investing is not about finding the perfect company. It's about weighing the risks versus the rewards and then taking educated bets on the likelihood that an outcome is going to happen. But I've explained enough, let's change the mood and jump right into it. Now, to start off the list, I want to talk about the monthly active user growth and how bad it's been. Now, I'm not talking about paying monthly active user growth, okay? That's grown practically 46% year over year. But monthly active user growth includes the amount of paying monthly active users, as well as the other people on the platform that don't quite contribute to the amount of revenue for the company. And that number has only increased about 11% year over year. And whenever we're actually talking about the last, 9 months trailing year over year, we actually see that it's only increased 3.7% year over year. We're great at converting users over to paying monthly active users and actually getting them on the treadmill that we want them on. But if we don't have new people joining the platform, then we're going to run out of actual runway to convert these people over to paying monthly active users. It's like trying to sell mixed drinks at a party. I mean, sure, you can be good at it, but if no one's coming to the party, then you don't have a business. And although analysts are predicting strong revenue growth numbers, this is not the case for actual profitability, for which they do not have yet. And institutional investors, or the people with all the actual investable capital, they love profitability. So the fact that we don't have that, they're not really buying into this company right now. Another reason why people are selling the stock is that their sales and marketing expense went up to $114.5 million last quarter, up 56%. Or another way of putting it, 110% of their actual revenue that they brought in this quarter. This is by far one of the biggest downsides of the company and what really scares people, because in no way could this ever be sustainable if your actual, expenses on just one expense, sales and marketing, is bigger than your overall revenue. Plus, Skillz is actually consistently missing their earnings per share estimates, which might only get worse in Q4, considering that the earnings per share, estimate is still just as high as Q3, but they said that they're actually going to downplay how much their sales and marketing expenses are and actually play a slower quarter because of the, how high the marketing expenses are, during these holiday seasons. So high advertising costs because of the holidays versus, a higher EPS than what we actually saw in Q3. It's not really lined up to be a great quarter. And Skillz stock has never really been that open about what their company actually does. They've been quite deceiving, actually. It's not about bringing esports to everyone. That's not even like a real true slogan. Esports is about, taking the best competitors and then having advertisers pay for the winner. And so you don't actually have to gamble anything but your time. Whenever you're a Skillz stock player, you have to gamble more than your time. You have to gamble also your own money because there's no advertisers and no one wants to watch you. It's just the money between you and a competitor. It's not exactly gambling because you're not like putting your money up to chance. You're putting it up to skill, but it's probably closer to something like poker, where you're putting up your own money and whoever wins gets to take the pot. Now, it doesn't mean that there's not a lot of money in the poker genre, but that also leads me into the next one where it's just their total addressable market is sort of, a little bit deceiving. Like, yes, they are being honest that the total addressable market for gaming in general are these $86 billion numbers. What's not truthful is the idea that every single gamer, including people under the age of 18, are going to spend their money to play games that they might not be skillful at yet. This probably leads to, a small 5 to 10% of gamers that would actually want to put up their own money. Plus, only a handful of their few really big top games actually make up for such a massive majority of their revenue. It's gotten a lot better in the last year, but still the lack of diversification could worry a lot of investors. And even that, some of the big Skillz games actually fall through. I remember a couple of years ago whenever they said that they had a deal with Capcom, that actually fell through because they couldn't actually make a game for it that worked properly for the brand. Now, although it's doubtful, this could happen with the Trivia Crack deal or even potentially the NFL deal. And adding to that point, in Q3 of 2021, there was absolutely no word of the NFL deal at all in the last quarter. I mean, this was the big deal that actually set this stock off in the first place, and you're not going to mention any part of it at all in the last quarter? I'm not saying we lost the deal or anything, but just give us a progress update. Although Skillz software is absolutely amazing, it's not impossible to recreate. And I think it's actually going to be worrisome for something like, some of these bigger brands like Zanga or Supercell, that they're not going to pair up with us because they're going to try to create this software themselves if it turns out to be a big genre. They can cut these massive costs and keep them for themselves, and they have the big teams to actually try to go out and do so. And the stock has actually dropped over 75% since their all-time highs. Now, this is not exactly bad for the company, right? There's a difference between a company and a stock. But what it does actually deal with the stock is the idea of actually selling its own shares. So if Skillz stock was ever needing to sell shares to try to raise some sort of capital, they would actually be 4 times less efficient at selling shares for new money because just the price of the stock is so down right now. And the stock has actually dropped quite a bit, and they're not just selling off just because they want to. I mean, there are things to worry about, right? The losses in this company have actually quadrupled to $79.2 million, up from $20 million of just last year. And I read this line from an actual short report from someone that was betting against the company, and they had spoken to a former employee that said that the numbers on Skillz stock is actually just smoke and mirrors. Now, I highly doubt that they would be falsifying, their actual reports and lying about their numbers on a $5 billion company at this point, but this is important to know that it's still from a former employee and that there might be some credibility to that if, that's what you want to believe. And Skillz stock games, virtually have, a very small moat. And I don't know why there's not a lot of competitors, but at the end of the day, it's still just a bingo game and a solitaire game that takes cash. It's also worthy to note that, Skillz actually SPAC'd onto the stock market. There's always some level of worry and distrust whenever a company doesn't take the traditional routes onto the markets. Although not all SPACs are bad, not even close, but there is some level of bad apples that actually make their way onto the stock market that could be absolute zero-sum games that actually lose a lot of your money. And another point is the fact that Skillz actually has been diluting their shareholders quite a bit by adding new shares. Not quite drastically in, recent terms. Actually, they haven't done it for quite a bit now, but they could continue to do what they did in the past to add new shares, which could dilute you as an investor. Not something absolutely to jump ship, but something that you should absolutely keep an eye on. And now this one might just be personal to me, but the idea that Skillz team is just slow to innovate sometimes. One that immediately comes to mind is the idea that they're only on iOS right now and that they won't actually take the leap to go to Android. Now, they always talk about it like they could immediately go over, bring the SDKs, bring the games on their platform, and add new developers on the actual Android platform. Well, if it's so easy and you could double your revenue, then go and do it. How come you're not on that platform in the first place? I mean, they are very similar actual designs between iOS app stores and Android app stores. So why haven't they done it yet? I mean, it's taken them years to say that they're going to jump over to this other platform, but yet they're just not taking the leap right now. Plus, I mean, the stock market is just in a desperate need right now for stocks with, big news coming in. They want to see that you're getting new partnerships, new deals, new innovations, new everything, or else the stock just goes down. And Skillz right now is just in a business as usual sort of phase, They know what they do, they're just doing it, but yet that's not, good enough for the actual stock market right now because uncertainties are high. It's not a bad thing for the company per se, but it is bad for the stock. Now, I'm not the only person that's noticed all these points that I've just said. There's a lot of institutional investors that think that the points that I've said are actually bigger than the points that I actually think are positive for the company. But that's led to a short interest on this company of over 18% on the stock market as of November 15th. That's an extremely high short interest for the company, although it has dropped a little bit. That's still a ridiculous amount that people think are going to drop, dramatically on a company that is already at 52-week lows. So wow, guys, I mean, a lot of negative news. But I mean, the truth is I'm actually extremely bullish on this stock. I mean, you're not going to find a company that I couldn't make a list like this for. If you like these sort of videos where you get to see a contrarian view or the opposite side of what people see about the stocks that you like, make sure you hit the like and subscribe down below if you want to see more financial content just like this. But anyways, guys, this is all for me. Hope you guys enjoyed the video. I'll see you guys next time.